As we head into 2025, Florida's once booming housing market is teetering on the edge of a collapse. After years of skyrocketing home prices, the Sunshine State is now witnessing an unprecedented shift, one that could see property values plummet in ways never before seen. With a wave of retirees leaving the state and a growing number of residents fleeing for more affordable options, the so-called Great Florida Migration is beginning to unravel. In this video, we'll dive into the top 10 cities in Florida that will crash in 2025. Number 10. Fort Lauderdale, nestled in Broward County, has experienced an unprecedented surge in housing inventory. Over the past year, inventory has skyrocketed by 80%, reaching its highest levels in a decade. The reasons are multifaceted: soaring property insurance premiums, rising homeowner association, HOA, fees, and a general cooling of the housing market. The numbers paint a stark picture. Since 2019, the average homeowner insurance premium in Florida has risen by an astounding 60%, according to Reuters. These escalating costs have forced many homeowners in Broward County to sell their properties, adding to the growing inventory. The cascading effect is evident in home prices, which are now showing signs of decline as demand softens. Fort Lauderdale is not just dealing with a local crisis, but serves as a microcosm of broader market challenges. Experts warn that the combination of high overvaluation rates, peaking at 20% above historical norms. 9. Tampa, located in Hillsborough County, is another Florida city grappling with a downturn. Active home listings have risen to 5,400, reflecting a growing number of unsold properties. The result? A 3% decline in home values in recent months, though this figure understates the severity of the situation in certain areas. Investors, in particular, are feeling the pinch, with many liquidating properties at losses of up to 20% compared to purchase prices 2 years ago. Despite these clear warning signs, optimism among local residents remains surprisingly high. Many prospective buyers in Tampa and neighboring St. Petersburg continue to invest in properties, seemingly unaware of the underlying risks. This disconnect between market realities and consumer behavior is troubling, especially as Tampa's housing market remains significantly overvalued, similar to the conditions in Florida just before the 2008 collapse. 8. Jacksonville. In Jacksonville, Florida, the housing market is undergoing a significant transformation. Once a hotspot for real estate activity, the city is now witnessing declining home prices driven by a surge in inventory. As of now, the number of homes on the market in Duval County has reached 4,100, the highest level in nearly a decade. This growing supply has already caused prices to drop, with the market showing a 26% overvaluation compared to long-term norms. The increased inventory comes with longer days on the market, signaling a clear shift from the seller's market seen during the pandemic boom. For prospective buyers, this might seem like an opportune time to enter the market, but caution is advised. With inventory levels climbing steadily, prices are expected to continue declining through 2025. Moreover, Jacksonville's rental market is also softening, with apartment rents dropping by 8% year over year. This trend is being fueled by an oversupply of housing as developers rush to meet demand during the peak pandemic years. 7. Sarasota, another once thriving Florida real estate market, is now facing a steep downturn. Inventory levels have surged to over 4,000 homes, the highest in a decade, while the average days on the market has climbed to 91, also a 10-year high. These changes reflect a sharp cooling of demand and an increase in available housing, creating a perfect storm for price declines. The situation is compounded by a similar trend in Sarasota's rental market, where rents have dropped by 8% in the past year. Like Jacksonville, the area saw a flood of real estate investors during the pandemic, all betting on rising property values and escalating rental income. However, the rapid oversupply of new developments, both apartments and houses, has outpaced demand, leaving many properties sitting empty or being sold at reduced prices. For buyers, Sarasota's current market dynamics may look appealing, but the prolonged days on market and rising inventory suggest further price drops are likely. Industry experts predict that the downward pressure on both home values and rental rates will persist into 2025, creating a challenging environment for sellers and investors alike. 6. Ocala. Once known for its steady housing market, Ocala is undergoing a significant transformation that signals an impending price correction. The data tells a striking story. The number of homes for sale in Marion County has skyrocketed from 803 years ago to nearly 3,000 today. This dramatic increase in inventory, now at its highest level in 7 years, has created a glut of supply, reminiscent of the early warning signs from the 2006 to 2007 housing market crash. This oversupply has turned Ocala into a buyer's market. Homes are now sitting on the market for an average of 68 days, the longest duration in recent years. As sellers face increased competition and fewer buyers, the pressure to lower prices intensifies. For prospective home buyers, this shift offers opportunities, but for current homeowners, it raises concerns about declining property values. 5. Port St. Lucie. Heading south to Port St. Lucie, the situation becomes even more precarious. This city, located in St. Lucie County, boasts one of the most overvalued housing markets in the state, with prices 41% higher than sustainable levels. Such a high level of overvaluation exceeds even the peak seen during the 2006 housing bubble, creating significant downward price pressure. The data underscores this instability. The Reventure Price Forecast score for Port St. Lucie is a troubling 37 out of 100, indicating a strong likelihood of future price declines. This is exacerbated by a surplus of inventory and homes lingering on the market for extended periods. National headlines, including coverage from the Wall Street Journal, have highlighted Florida's shifting housing dynamics, with articles pointing out dwindling buyer interest and the reversal of pandemic migration trends. Hurricanes and extreme weather events have added another layer of complexity. In nearby St. Petersburg, price cuts on hurricane-damaged properties have been drastic, with some homes selling for up to 57% less than their purchase prices in 2021. Number 4. Cape Coral and Fort Myers. Cities like Cape Coral and Fort Myers, nestled in Lee County, are at the forefront of this slowdown, with home prices already dropping by 5% year over year. This trend is expected to continue well into 2025 due to a perfect storm of rising inventory levels and plummeting buyer demand. In Cape Coral and Fort Myers, the number of homes available on the market has surged to 9,600, a massive increase from the pre-pandemic figure of 8,500. This sudden influx of inventory is overwhelming the market and driving prices downward. Even more concerning for sellers is the drastic reduction in buyer demand. According to recent data, home sale transactions have reached their lowest point in a decade, signaling a major shift in the housing market dynamics. With fewer buyers in the market and a growing number of homes available for sale, it's clear that the housing boom in Lee County is fading. Buyers who may have once eagerly competed for properties now find themselves in a position of leverage, driving prices even lower. For anyone thinking about selling in Cape Coral or Fort Myers, 2025 could prove to be a challenging year as these trends continue to unfold. 3. St. Petersburg. As we move to St. Petersburg and Pinellas County, the housing market appears similarly primed for a downturn in 2025. Recent data reveals that the number of homes for sale in this region has surged to 5,600, marking the highest level in over 7 years. The sharp increase in inventory has put downward pressure on home prices, with some homes already experiencing price reductions of up to 20%. Unfortunately for homeowners, the worst may not yet be over. After a temporary dip in listings caused by hurricane disruptions, the market is poised to rebound with a fresh wave of inventory expected to flood the market by early 2025. This influx will likely drive prices even lower as buyers remain cautious and demand continues to dwindle. 2. Lakeland. In 2022 alone, builders pulled more than 200,000 permits across Florida, pushing a wave of new homes into the market. In Lakeland and Polk County, this surge in construction has led to a significant increase in inventory. The area now boasts nearly 4,800 homes on the market, up almost 60% from the pre-pandemic norm of 3,000. With fewer people moving to the region, demand is waning, and prices are beginning to fall as a result. Home values in Polk County have already dropped by 2% month over month, and analysts predict that these declines will continue. The large influx of new homes, combined with a slowdown in migration to Florida, has created a perfect storm for lower prices. Number 1. Orlando. Further south of Orlando, Ocala County, home to Disney World, has seen an even more pronounced impact on home values due to overwhelming housing supply. In 2023, Ocala County saw a staggering 3,800 homes listed for sale, nearly double the pre-pandemic figure of 2,200. While the area remains one of Florida's most popular due to its proximity to major tourist destinations like Disney, the massive supply of homes is starting to outweigh demand, signaling a potential decline in home prices in 2025.